Hello, everybody. Welcome back. We live in a time today, investing wise, where I feel like performance is the most important thing. Whereas in the years past, maybe dividend income or yield have surpassed that in people's thesis when it comes to stocks. But for me, at least, it seems that total return and performance has surpassed that is the most important thing when looking for long term holdings. It feels these days it's become less and less acceptable for your traditional dividend stocks to be owned in a portfolio, such as Coca Cola, Philip Morris, Procter and Gamble. Those kind of stocks that are going to provide safe and stable returns but overall underperform over the long term. It feels like those stocks have been less acceptable to own these days for people that are younger. In 3 weeks, I'm going to be reeling my entire dividend growth portfolio updated, which has been under construction for a bit now over this winter. So to lead off that, I'm going to be doing 2 separate videos. The other one will be showing my worst performing stocks in the portfolio so far. And in today's video, I'll be going over the best performing stocks, and this is just by percentage, not dollar amount. Make sure you subscribe, turn on post notifications so you don't miss the entire portfolio reveal and my worst stocks too, because that's going to be a lot better than this one. It's not complete cigar butt city like fiscal philosophy over on the Cash Flow Kings YouTube channel, link in description, where it's everything's down. Alright, let's get on to the video.
Hello, I like money.
Alright, the biggest holding in my portfolio, this should come as no surprise, and it's also the biggest one with gains, dollar amount and percentage amount, which is of course Microsoft, stock ticker MSFT. Now, a big part of my Microsoft position is gains, but I also did invest a lot of the money in 2022 and actually documented my buying progress while you subscribe and turn on post notifications, right? Recently, Microsoft has been trading near all-time highs near the $420 range, and a lot of this has been due to the AI craze and AI boom in the entire stock market. Now, I didn't invest in Microsoft for its AI business. No real man's investor is investing in AI, let's be honest. As far as I'm concerned, the only AI I know is Starbucks, Kroger, and Target. When I was buying Microsoft at $230 to $240 range, I even got it as low as like $220. I was really buying it for its really strong cloud business, reoccurring revenue sources, and I also really did like their big potential with the gaming business, which has proven very well. I've done a video on that. It kind of flopped, but it's a great quality video. I'd recommend you check it out. I think Game Pass and Microsoft's Xbox segment has the real potential to be the next Netflix of gaming. Of course, I went really in depth on it, but that was a huge part of my thesis when I was buying the stock. But now it's gone up a little below my cost per share. I bought my first ever Microsoft share 4 years ago when I began investing at $180. And it's absolutely wild to see where it's gone now. It's why you don't try and time the market sometimes, and sometimes if you're even paying a bit of a premium for something, it's okay. But right now, my Microsoft position, fueled by the whole little AI boom right now, is up 76.79%, and it's been as high as 80%. Microsoft actually had a bit of a dip about a month or two ago, and it got down to about like 380, 390, but nothing really close for me actually buying. I would probably dabble a little bit at 350, 340, but I think that's a fair price, and there's no reason for me to add right now, with it kind of just compounding on its own right now. So I'm really happy where my Microsoft position is at. Their cloud business is awesome. I think the AI is just a cherry on top of the ice cream for me. I invested for the ice cream and the strong cone that is their cloud business. Satya Nadella is an absolute genius in my opinion and one of the top CEOs in the entire world. I love Microsoft. For me, it's a buy and hold forever company. Awesome dividend growth, awesome share buybacks, and I think long term this will definitely be a top 5 position and probably my number 1 holding. It's honestly wild to think that just 15, 20 years ago people are writing off Microsoft for dead. The next holding is a bit of a shocker, and it's pretty unfortunate because I only own 2 shares, and it's Texas Roadhouse, shout out Joey C, which is up 55%, and I haven't even owned the stock a very long time at all. I bought about a year ago at around $105. Since then, it is now near 160. Absolutely crazy the climb up in this company, and I even thought it was a little overvalued at 105, but it's absolutely wild. Unfortunately, it's only 1.5% of my portfolio, and I'm also a little stuck of what to do with the company. It's an awesome business model, very simple business model, easy to understand, quality product, quality service, and affordable food. That's all you really got to understand with the company. Now, I don't know if I'd be the greatest investor of all time for buying at all-time highs like this when there's other opportunities in the market, and I have the dollar cost average down in some other holdings, not to be named. I'm really stuck with this one because at one side you do want to take gains in the company. It would be really nice. I don't see myself adding to it for a while. I don't know where I'd really average down, but it's also a really quality company in my opinion. And I'm just kind of stuck with it. So I'd like to hear your thoughts in the comment section on what to do. I'm one of those guys that loves to buy and hold these companies forever, but at the same time, it's a smaller position. I already have really solid gains in the company, Would I be better off just putting this into a company like Visa right now and let it compound? I just don't reasonably see myself dishing out another $160 just to add another share. But I'll be doing further reevaluation on this company, but I would like to hear your thoughts in the comment section.
Thank you, Joey C.
Alright, well, we're on the theme of some of the smallest holdings in my portfolio with the biggest gains. Next, we have Waste Management, which is up 45%. One of the first stocks that I ever bought, and I just haven't rationally realized myself to buy any more at really a great price. I did dabble at around 155, 160 bucks. I added a bit to the position, but it's gone up to about $200, $205 since then. Recently, though, they've been in the news for a new acquisition that was about $7 billion, and the stock price is down a little bit since then. But at the same time, for a company like Waste Management, you're not going to see crazy growth for the multiples they're trading at, so it's a really weird holding as well. It's a buy and hold forever company. I'm not going to sell it, that's for sure, but I can't reasonably pay the kind of price that they're offering on the market right now. For Waste Management, I'm just going to be patient, find a reasonable price. Eventually, it will have to go down sometime and probably buy back and then maybe a little more aggressive. But overall, happy with my holding right now. Just kind of reinvesting dividends, letting it naturally compound, as one could say. Like, it definitely offers sustainable growth. It's strong and sustainable growth, but it's not Microsoft or Visa level growth. And for the kind of multiples it's trading at, I'm just not 100% sure it's worth buying right now. I think you're definitely going to be overpaying. 150, 160, 170. 170 I'd likely dabble at, but definitely 150, 160 I'd build up a more core position in the company. I'd like to make it a top 10 holding in the portfolio for sure, but at the right price. Alright, the next company, thankfully it's a bit of a core holding, and it's Apple, stock ticker AAPL. Right now, Apple makes up 8.7% of the portfolio. It's my third or fourth largest holding. I can't put my head on which one it is. I'm up 41% on the company right now. I first bought the stock after it split in 2020, and it's only gone up since then. For some reason, people have actually been switching up on Apple recently, and I think it's actually pretty wild. A lot of people like to proclaim themselves as long-term investors, but anytime there's some negative sentiment from what other people say about the company, they want to sell the stock. It's absolutely ridiculous, and if you're sold out of Apple and you consider yourself a long-term investor, shame on you. Don't copy influencers' trades on YouTube, please. People are saying that Apple's in a bit of an innovation dud, and I can kind of see where they're coming from, but at the same time, they did spend a lot of time and resources, it appears, on the car, and they scratched the project. I think long term is probably the best move to go with. It was going to be a crazy product no matter what, but the car business is not the greatest business investor-wise. From what I understand, they're going to be reallocating all that capital they would have put towards the Apple car into their AI development, so I think that's a positive thing for sure. Obviously, I talked about how I don't love the whole AI thing, but I think it is a positive thing. If you're investing into these companies that already have a really strong business, if they're dabbling into that, I think it's crazy potential. I will also never question a thing that Tim Cook does as CEO. I think he's probably my favorite CEO right now. One of the best CEOs in the entire world, undoubtedly. Crazy performance shareholder-wise. Apple loves doing share buybacks, which is awesome tax-wise for them, but also as a shareholder. Over time, you own more of the company. For the little sissy investors who actually sold out of the company, guess what? You won't get the benefit on that in the next 10, 20 years. So Warren Buffett was buying his Apple position in the $150, $140 range with updated financials and updated cash flows at about $160, $170 to where Apple is at today with their current cash flows. So I think Apple, I was buying at $170 and below pretty decently, actually. If you were watching the portfolio update, subscribe to our post notifications, obviously. But I was buying below 170. I was nibbling maybe at 175, 180. And I went pretty heavy below 165. Apple's an awesome company, and I love it so much from a consumer perspective, but also as a shareholder perspective. The Apple ecosystem is alive and well. I see it every day at school. People are addicted to Apple products. There's a good chance you're watching this video on an Apple product. I see it every day at school, and I think as generations come up, they're going to be naturally tied into Apple products, which is so bullish as an investor. Alright, I want to thank you for making it to the video. These are some of my best performing stocks, and honorable mention is TKO, which is up 35% since I bought just a few months ago, so awesome to see there. Alright, thank you for watching. Shout out to my channel members Redwood and SoFi Boy Major Speed. Your support is greatly appreciated. It takes a lot of stress off my back. Thank you for watching. Smash the like button, subscribe, and do Dividend Stocks Drugs. Have a good one.